I like the framing. I've heard this multiple times, is that the tax office is your most expensive business partner, right? They really are. And like, this is someone you're going to have a relationship with for the duration that you're earning in Australia. You really, really are. It's a very, very powerful thing. Also, I think this is one of the most misunderstood topics as well. People just tend to have a very much of like, avoid tax. I should be trying to pay the minimum tax. That's not true at all. But I am going to go over some things here. I know someone personally who had built a company with business partners and bought things in that company but had not set the company up properly or put the right structures in place. They worked their asses off for years and then sold the company. And because they didn't set the structures up and didn't understand the mechanisms of tax, when they sold it, their tax rate was 50%. Now, we're going to say this, and this is very close to the number. The number was 10 million they sold for. Okay. So you can imagine this is 50% tax bracket now, 5 million in tax they've got to pay. If they had strategically known they were going to go this route at some point and set things up accordingly, they could have got a 30% tax rate, which would have only been 3 million. So we're talking about the difference of $2 million in their pockets here by not understanding tax. Now, if you go into the world of buying and selling shares or buying and selling property or even crypto or any asset stuff, how you're set up and structured plays a huge role in the tax you will pay massively. So misunderstanding this, you can have a terrible end game that wipes out years of effort in not understanding these concepts. But we were talking a little bit before about this. You made a really interesting point that I'd love you to chime in on here, Grant, about reasons why you would want to pay more tax.
Yeah, so there's interesting view because to your point, like a lot of people go, I just want to pay less tax. And similar to some points that we've mentioned before, I'm like, well, how can tax work for me? Right? And so one of the greatest parts is debt. So I know that if I pay more pay-as-you-go tax, which is the tax that I pay on my salary that I would give myself each month, etc., then the bank's going to look at me and go, I'm willing to lend you more money, right? Which means that now I've got tax working for me. So if I do everything that I possibly can to take money out and not pay tax and do all of those things, well, the amount of money that I can borrow decreases, which now I'm starting to sort of rob Peter to pay Paul. But now the overarching strategy for me with our wealth creation is going to be impacted because I'm like, well, now I'm playing my game not to lose, right? As opposed to playing my game to win.
So to break that down, by paying yourself a higher salary, yes, you're going to pay more tax, maybe even go up a tax bracket. But in the eyes of the banks, this would actually open you up to buy a property or access debt or use it for shares. I'm not going to go strategically here that you have to be property. I know we've mentioned it quite a few times. I know people that use debt in the share market effectively. It can definitely be done, or crypto. But I think it's just an easy example for this conversation being we both do property-related stuff.
Yeah, 100%. But I also look at superannuation as a form of tax to an extent, right? Now, I can choose to load up my superannuation, which is before tax dollars, right? I can go and contribute them, like what is it, 10% at the moment, as a way for me to go, okay, well, I want to invest through superannuation. But also through the structure that I've got now in my business, I can choose not to. I can just pay myself through a distribution and use that money that I would have otherwise put into superannuation into building my own assets because I might think that I can invest better than my fund can invest, or if I've got an SMSF or something like that, right? So there are different ways for you to utilize tax and the structures around tax. Just understanding them will allow you to play this game of wealth like in a better, more strategic way. And the interesting point was, I reckon I would have been 20 at this. So I started out my whole business journey as a sole trader. And then I got a new accountant. And he's like, you need a company. So I'm like, great, I'm all in on a company. And then the business started making more money. And I went to a different accountant who started pulling his hair out going, what? You don't have a trust sitting behind the company? Oh man, we're done. Like this is, you can't not, right? And so then we started picking this to pieces because of the journey that he understood that I needed to go on as a business owner. I'm like, this is where I want to get to. And he's like, yeah, the structure's not going to support you for it.
It's funny you mentioned the whole superannuation thing as well. Again, it's like I had notoriously been someone who disliked contributing in my super. And then I had a guy say to me, I was on a call, And it's pretty simple, right? It's like you think of it like this. If you take the money out of your business, you're going to get taxed at 30%. If you put the money into super, you're only going to pay 17% tax.
Yeah.
It's free money because you can't access for a long time, but that difference is free money. And I was like,
different games.
Different games. And I was like, but it made me think about it differently, right? It's like you can use tax and structures and a whole bunch of things here to play a very, very different game if you understand these concepts.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all and you want to dive deeper into wealth creation, check out the full episode by clicking the link on your screen or in the post right now.